Hello, you're watching The Annuity Show, and we are joined today by certified financial fiduciary and the featured expert in the book, A Journey to Financial Security, Elise Roberts. She's going to talk to us a little bit about how inflation can erode retirement savings and how annuities might be able to help mitigate that. Elise, why do you think that inflation is such a big concern for retirees?
I think inflation is a big concern for everyone.
Right.
Especially retirees. Because when you stop working, you no longer have that extra money coming in.
Right.
So you have to make sure the money you have is not going to, number one, if it goes backwards because you had a major shift in the market, now you're actually trying to catch up. And unfortunately, you have to either live on less or maybe go back to work.
Right.
Those aren't good choices.
No.
So I don't want that for anyone. So anytime we talk about inflation, if you're putting money in an annuity, this is your inflation protection. Because number one, your money can't go backwards if you do it right, okay? Most annuities, that's the way they work. There are some that can go backwards. I don't even offer those because that's usually not what retirees are looking for, is that other risk.
Yeah.
So having inflation protection, if you're living on income from an annuity, you probably want, if you're under a certain age, you want to make sure that income is increasing. If you're old enough, and then maybe you don't need it to increase as much.
Right.
But you do need to have some protection, and just having the downside protection of the fixed or the fixed indexed annuities, to be specific, those are your inflation protection before there's other protection.
Right. What about, how does inflation affect the purchasing power of annuity payments over time?
So if you're on an income that is level, and so you're getting $1,000 a month for life, and you're 60, that's not a good idea. Because in 10 years, 8 years, that $1,000 a month is not even worth the $1,000 a month anymore.
Right.
So your purchasing power on that money, just like anything, you have to make sure that it, depending on your age and other assets, you don't want to lose value. And sometimes that doesn't mean it went backwards. It meant that the inflation went up. And so now you have more costs everywhere, and that check's not doing what it used to do. So we have to protect people based on their age, their health, and what might happen, their family, their lifestyle. Everything matters.
Yeah, absolutely. And you kind of touched on this a moment ago, but can you elaborate a little bit about what types of annuities or what features can really help with that inflation protection?
Well, number one, the annuity, and number two is increasing income.
Okay.
So when you don't have increasing income and you're under a certain age, that's a negative right out of the gate. And sometimes people come to see me and they have maybe an older annuity, something they did 5 years, maybe 5 years ago. And that feature in that annuity is when they turn it on, it's never going up. So that's a negative, because if they wait too long, what if they don't live long enough to enjoy it?
Right.
So you want to make sure not only they get the increases, but they get an opportunity to get all their money during their lifetime, and the gains, and maybe bonuses or extras a company does, and still live long enough to get more money, because those checks are lifetime. So the longer you live, the more opportunity to actually have more money, your gains, maybe bonuses, and then you get to live on the company's money because you got all the other money out.
Wow, that sounds like the ultimate.
Yeah, it can happen, and that's what we try to plan for, is that you're not just going to get your money back. Those are the old annuities, and that's what people say sometimes when they don't understand.
Yeah.
And it makes sense because they've been told this. You don't want an annuity, you're just going to get your money back. That is not true today. That's a myth.
Right. And once again, I feel like I say this every time we talk about annuities, but I learned something new I didn't know, which was that increasing income. I think a lot of people don't know that that's an option, a feature that you can find in an annuity.
And sometimes it increases maybe, and sometimes it's guaranteed to increase. So all of that matters as well.
Right. Can you think of, I always love to get these from you because you have so much experience. Can you think of any real life examples with your clients of people who have used this for inflation protection?
So I'll give an example that actually goes the opposite direction.
Okay.
I recently had a client who's 79, and it's time to turn on her income. So here's the thing is, she doesn't necessarily need income that's increasing. She's 79. She might want that. We could do that. But what I showed her is we have a plan that actually gives you a lot more money every month, every year, however you take it. By the way, you can take it any way you want. Monthly, quarterly, annual. The dollar amount at the end of the year is the same.
Right.
Okay? So I suggested one that instead of getting $22,000 a year and have increasing income off of this amount she put in this one, is to put it over here, take the 40,000, I think it was, no, it's 22, I think it was about 30 or 32,000 a year, and we did the math. If she lives to be 99, she gets more money out of the one that paid her the larger amount up front than waiting for the increases that she might not live that long.
Right.
And then this writer has a cost. So why pay for that bigger check? And it makes sense for her to pay for that because she's getting almost $10,000 more. It's
Right.
$1,000 more a month.
It's worth it.
Because at her age, that company's going to have a much bigger payout, but it's never going to go up. But it made sense for her because she is pretty healthy, but she has some other things that run in her family, and she probably would live to be in her 90s. But to go to 99, if she got to 99, she's still breaking even.
Right.
With all of her money, all of the gains, all of the extra. She still gets all that out, but if she lives to be 99, she'll still get the bigger check, but the other one would have caught up by then.
Right.
So it's like, an extra 20 years.
Wow.
So it made sense for her to have the non-increasing income.
Right.
Now, if someone is 60, they need an increasing income period.
Yeah.
Because unless they have something they know they're going to pass in the next couple of years, most people need increasing income.
Yeah.
Because you're going to live.
Yeah.
And if you live more than 10 years, inflation's going to start
You're
eating
gonna
that check.
feel it.
8
Yeah.
years, 10 years.
Yeah. Well, are there any risks to adding inflation protection?
The risk would be not adding it if you ended up needing it. And the risk of adding it, a type of bigger check to be inflation protection that way, is the cost. Because, you're going to pay for that every year. So if she lived to be, a much higher, more than 90 something, there won't be any money left for her heirs.
Oh, right.
If she happened to die early, there's going to be money left. But she's taking big checks out. She's taking much larger income checks, but that's what she needs.
Yeah.
So in her situation, it's pretty much the opposite of someone that's younger.
Yeah.
So 79, we ran the numbers, and that's the key is maybe this is better, maybe not. Let me run the numbers, and we'll decide when we see it. And that's what we bring to the table is the expertise, the time we take to do the evaluation,
Yes.
and actually always run the numbers and take a look at them.
Yes.
And put them side by side.
Yeah, so you can see. Well, as always, I have learned so much from you, but we have come to the end of our time today. Before I leave you, I want to remind you that inflation protection isn't just about numbers. It's about preserving your lifestyle for decades to come. So if you want to reach out to Elise and see how you might be able to incorporate some inflation protection into your planning, please give her and her team a call at 888-526-4184, or you can go to theannuityshow.com, or you can just scan that QR code that you see on your screen. Thank you so much for joining us here on The Annuity Show. We'll see you next time.